Market's quiet. Justify wins the second leg of the Triple Crown, and China's in trouble. What's up, everybody? Welcome aboard Bubba's Bottom Line. And before we get started today, we must send out our thoughts and prayers to everybody in Houston and every parent around the world, everybody around the globe. What a tragedy, another senseless shooting that we need to figure out a way to stop these things. But our thoughts and prayers go out to all of you. And obviously, we can't say a lot about it because there isn't much to say of such a tragedy. But our thoughts and prayers are with you, and we move on. In the meantime, welcome aboard to Bubba's Bottom Line. And of course, last week the markets were basically quiet, comatose, did very little, hovered around the upper end of that consolidation. As you know, we called the end to the downtrend, the recent downtrend, and said that we would be neutral and observe and look to see what the markets did when they started to go back to the upper end. Basically, they are still consolidating in a range towards the upper end. They looked like they were going to break out last week and just held and didn't have any real action. Volume was very pathetically light. Volatility was virtually absent and getting collapsed and crushed. So it's something that we will continue to see. The one, I guess, if you look at the bright spot, the Russell scampered to brand new highs the last 3 days of the week. And what does that mean? Well, I think one of the things that you have to understand is that the Russell itself is not as affected by what's going on globally because they're only basically U.S. companies in the Russell. So they didn't have the same issues that you might consider. So that's why you're seeing some of the monies flow into the Russell because of the small caps, because of the lack of effect of what's going on globally. I think you saw interest rates. The 10-year consistently last week closed over 3%, and the dollar continues to run. Now, again, you know that we've said here many times that our black swan event is going to be charging interest rates with a charging dollar, and we expect to see by year end a 4% 10-year and a dollar at par. That will not bode well for all of these companies that have borrowed gobs of money on rotating rates that can go higher. And when you start to see these rates go higher, that will start to cut into the profits. That will start to cut into a lot of the problems. And I think the other thing you're going to see is as interest rates start to consistently close at over 3, then close to 3.5%, a lot of the people that are in the equity markets that don't want to be there will start pulling their money out and going elsewhere. And I think that is something that is part of regular dynamics. So it will not be a surprise, except for the latecomers to the equity market that keep pouring in regardless. Now, again, we'll call the equity still neutral, although at the upper end of consolidation here, you might see a little bit of a sell-off. Last week we said we would figure to see some selling, and we did. We were actually down for the week marginally, except for the Russell. So we have the dollar that is charging ahead and looks to get to 95 possibly this week, but on its way to par. You've got the interest rates going higher. No surprise, we've been calling for that for quite a while. I think another story that we look at is in the oil market. Oil is still in that backwardation. There is still no fundamental reason why oil is charging higher. You consider to see that the spread between Brent and WTI is widening, which shows you there's even more fear there, which that's logical because that's where the trouble is. We've got our own oil, we're net exporters, so there shouldn't be a problem. We did not get stopped out of our oil, although we are uncomfortably still in and will stay in. I think that we're going to see at some point here, sooner rather than later, oil is going to turn around because of the formation. Again, it has nothing to do with what I think about it. It's simply based on when you're in what's called backwardation. And oil in July now, because we're no longer trading June oil, July oil is more expensive than any other oil on the board. That is a fear trade. That's all that means. So when the fear subsides, you can look for oil to come crumbling down. Gold almost reached our target of 1280. Probably will reach it this week, but again, we would not be sellers down here. We would only be buyers if we're going to be players in here looking for gold to run back up. Now, there is a chance, obviously, you could trade down to 1260. I mean, it certainly go lower than that, but I mean, that's where we see it. But I think 1280 will probably hold. I think that's something that, of course, we watch on a regular basis, and it's really more watching the footprint of the market versus anything else. When you look at some of the other things that are happening, you've got the bond markets continue to sell off, which makes sense. That brings the higher interest rates. You've got, you've got the grain markets. Okay, very interesting. We had soybeans close below $10, and soybeans, as you may or may not have heard us say many times before, was our one concern in the entire grain complex. This could be a concern now. I would expect firmly that soybeans will make one more charge up, okay, to give you a chance to exit if you'd like to do so if you're in. But we're still very concerned. This pattern is not looking very healthy at the moment, as we've just got clobbered since 1040. So we'll see how it works out. Now, if we can make some sort of a bottom, then we might be okay. But the volumes were very light there as well, which is a bigger concern. Corn and wheat look terrific. They both had decent weeks last week, got there different ways. Corn was extremely volatile and choppy, but did close higher on the week. And wheat opened on its low on Monday and at a major move up on Friday. Now, we would expect probably a little bit of selling pressure here early in the week as we head towards the Memorial Day holiday. We would also expect the markets to be extremely quiet here. So these are things that we have to be concerned about and that we're watching, is what to expect and what to see what's going to happen. The meats, cattle has been under some very strain and a lot of pressure. I think that, again, we believe that cattle is a buy somewhere around here. I'd like to see one more little push to the downside. They did hold above certain levels we were watching, but not others, and it hasn't been as strong or as quick as we wanted. But again, we do believe that will change and that will turn. So we're looking to be buyers of cattle. We're also looking to be buyer of hogs. Hogs were in that W formation and have now consolidated the last couple of weeks out of that formation. So we'll see how that plays out here. But again, in general, we're neutral to slightly bearish equities. We are bullish the grains, except for soybeans. We're bullish the meats. We're actually getting bullish on gold, bearish on oil, and we think interest rates are going much higher, which could create some major selling pressure in markets as we go forward. But I think one of the things we have to look at here now is the subprime effect. You know, we went through this in 2008, and it looks like, as happens, history is about to repeat itself. I was actually hanging out with a banker friend of mine, and we were talking about the subprime, and he is telling me that there's a lot of subprime things going on once again. Now, what does that mean? It means that if you remember, we talk about the debt crisis. If you remember, we talk about that people aren't making enough money. All these little things are going to all come up to a head at one time. And I think that, to me, becomes the overall bigger story, because you're going to have the Fed most likely be put to a decision again as to whether or not they're going to bail them out once again, because this debt is going to collapse. There is no way around the fact that the debt that we see here that is at ridiculous levels. Not only the national debt, but individuals' debt, credit card debts at record highs. Okay, lending, subprime lending. Banks are once again lending out money to people that shouldn't be borrowing money. All right, you've got this. You're going to have this rush for housing again. And the greed of the banks is going to bring more of this subprime lending. It's a common thing when you look at it, because what hurts and kills all markets are fear or greed. And right now we're in the major greed cycle because the banks don't want to miss out. And unfortunately, I don't believe, in my opinion, I don't believe that the banks have enough in reserve for what they're lending. The reserve ratio is supposed to be about 10 to 1. So if they have $1, they can lend out 10, which is their own cockamamie way of printing more money. But I don't think they have the 1. That's my issue. Again, that's my personal. I think these stress tests that we supposedly have on the banks are bogus. Again, my opinion only, but that's what I think. I think that they're bogus. I think that we're going to see the same problem. And of course, if you were the bank side, why wouldn't you get greedy? If you know that the Fed is going to bail you out once again, why would you not get greedy? That's one thing that I always look at from my standpoint is that what do they care? They're going to go ahead and do the same thing anyway. So this is the old Albert Einstein doing the same thing over and over again and expecting a different result. I don't think we get the different result. And I think that becomes the bigger problem. And that, to me, will be part of the overall meltdown once again, as we always see. And again, this has not changed in forever in any market. We see these things happening all the time. So as we move forward, debt is ridiculous. Now, we now have the talk of as we blunder our way into a recession again. I have the question to ask, have we ever come out of the last recession? Yeah, I know the stock markets are at record highs. I know that everything was supposed to be good. But what I don't know is where is it all this good? You know, places that I've gone to, people that I talk to, I haven't heard that. Right? So to me, it's a bunch of BS if we actually think that all this has just suddenly corrected itself. All we've basically managed to do is kick the can down the road. And I think that, you know, when you look at what we call the yield curve, short-term interest rates are going up faster than the longer-term interest rates. That is not a bullish sign. That is a flattening or a possible inversion, which typically leads to a recession. Again, I'm not so convinced that we didn't have we've ever come out of the recession in the first place. I then look at, you know, what's going to happen this week. We've got the Fed minutes this week. Now, those are already, they're antiques. They're archaic by the time they announce them. I don't know why everybody makes such a big deal about the Fed minutes, because the news has already been pretty much played into the market. So if we're going to see, what are we going to see different? I mean, I can't stand their inflation target and what they continue to say. I know that I paid $68 to fill up my tank yesterday. All right. And I know that I paid, I couldn't believe when I saw the pump, I paid $3.17. And I know many of you pay more. Okay. So I'm not whining about it, but I'm just saying that I look at my goods and services and I'm paying a hell of a lot more money today than I was paying a few years ago. All right. And I'm not making any more money than I was. So I know that there's inflation out there, no matter what the Fed wants to tell me. And I think this is where when you hope to live off of an economic theory instead of what real life is, you don't get it. And I don't care about their PCE inflators. I don't care about all the data that they go over, because if you've ever noticed, the data that we get from the government gets changed all the time anyway. So what difference does it make? I mean, the biggest problem I have with data is they revise it all the time. So what good is it? All right. I don't believe, you know, we talked about Michigan sentiment. That was out Friday. Well, what are they going to tell me? It's 5,000 people. Again, you take all of these government reports, not one of them, in my opinion, is worth anything. Okay. I'd like to, this is a G-rated show, though I'd like to say what I really think about it. But we continue to believe and want to watch these numbers, and the pundits are hovering over them like there's something major. But what difference does it make? They're going to be revised anyways. We had a bad jobs number, they revised it up. We had a good jobs number, they revised it down. So where is it that this is actually going to mean anything? Okay, where does it mean? It means if people are making money and spending money, then we're good. Well, we're not seeing people make money. We're not seeing people spend a lot of money. And I think that's the bigger story. More people are continuing to hoard money in their checking account because they're afraid to do anything, because they're not making enough money. That's so we can have all this conversation we want, but when you have a group known as the Federal Reserve, okay, the clueless being led by the clueless and the blind, right, you have something that doesn't work. This is not new. It's 105 years. It has never worked. So why would I expect today to be different? This is Bubba's Bottom Line, Todd Bubba Horwitz. I'm going to step out here for a break, and I'll be back with more of Bubba's Bottom Line. What's up, everybody? Hey, remember my high school investing program, highschoolinvesting.com. Take a look at the curriculum. Check it out. If you'd like to help us, we're in 515 high schools. You can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Help us out if you'd like. We'd like to obviously continue to do this program, but it's getting tighter and tighter and harder to survive at the cost. Obviously, the bigger we grow, the more it costs. So if you'd like to help us, again, go to patreon.com/Bubba Trading. And don't forget to catch the Bubba Show every day at 4 to 5 Eastern at libertytalk.fm. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, we had the Preakness yesterday, and Justify won it easy. And, you know, it was amazing. I think a great horse, and I would probably say it's going to be a Triple Crown winner. It is always hard because of the grueling races, and there'll be some fresh horses coming in. But if you're a fan, a horse ran a great race. You can't knock that, and it looks really solid and really strong. But in the meantime, also last week was the consensus in New York on cryptocurrencies, and I think they had a pretty good showing. I know I was there for a day until I had to run home for a family emergency, but I think it looked really good. I think the cryptos are really making some strides. I think that, again, as I've said many times before, they are real, they are spectacular, and they're not going anywhere. Now, again, which ones are going to survive? That's the key question. My guess is Bitcoin will survive no matter what. Bitcoin, at worst, in my opinion, will turn into digital gold. All right, but which are the others? Probably Ethereum, maybe EOS. There's a lot out there. So, and I'm not as versed as I'd like to be. I wish I would have been a buyer when I was first told about it, but unfortunately, that's why one of the names of one of my companies is coulda, woulda, shoulda. But right now we couldn't, wouldn't, and shouldn't, so we didn't. But in the meantime, here you got cryptos are great. You know, again, they're going to trade like any other market. They're going to go up, they're going to go down. You're going to have a lot of fighting on the way, but some of the biggest detractors all of a sudden are not detracting anymore. Jamie Dimon, the threatener who was going to fire anybody who got involved with it. Well, they're involved. All right. So, you know, all of a sudden something has changed. And what has changed? Well, they probably bought, JP Morgan probably bought a lot of stuff first before when they were bashing it. So now it's worth a lot more. Goldman Sachs, okay, they're going to supposedly potentially have their own coin. Now, I don't know if they are or they're not, but that is a supposed, that is talk right now. But they've been involved since the beginning, since they turned down some people who had the idea. So, again, I wonder if Warren Buffett's going to sell his, and Charlie Munger are going to sell their Goldman Sachs stock because of the rat poison that they're getting involved in right now. I don't know. What do you think? Okay. You know, I love these guys that yap it up pretty good, but I think there's a lot of issues out there, and I think that you're seeing the big push into cryptos because of the Federal Reserve. This is, as we've mentioned for years now, that there's going to be another revolution in this country, and we didn't say it would be a fighting revolution. This turns out to be a financial revolution. And what happens in a financial revolution? You're trying to see alternate signs of currencies. Why? Because people are tired of the manipulation of the currency. And that's what you're seeing. So you're seeing a fight against the Federal Reserve. Now, the other thing we look at is, we talked about inflation in the beginning. What about stagflation? Okay, wages. We are not making money. Okay, we are making less money. It's almost we're making less money day by day. As we continue to hear the lack of inflation, well, our paychecks aren't going up, and yet my cost of goods and services are going up. So to me, again, that becomes another problem as we look forward. I think that these are things that we have to deal with on a regular basis. And when you're making less money, especially when your jobs are getting cut down on hours, okay, maybe they're hiring more people, but we have a real problem in this country, and that is there are a lot of very high-paying jobs out there that are open. Unfortunately, most are not qualified for those jobs because they weren't trained for them. Now, the difference between the tech revolution and the industrial revolution is the tech revolution is much harder to teach, and it's a much harder concept to grab when you're someone like my age, right? I mean, I got enough trouble turning the computer on. So that's the real situation. Now, eventually it should resolve itself out as we bring in the younger workforce. But there are still many who are having to work. And of course, I don't know if you've read the stats, but there's many people that even at 75 don't have any money saved. So that becomes another real problem. And when you have money being invested in the markets because they're trying to chase the yield, if the yield gets better somewhere else, like in the 10 years, you're going to see money run there. So I think that is a problem that we haven't seen in quite a while. But this stagflation it cannot be ignored. Now we're going to ignore it, right? Because that's what we do. What we do best is we ignore. Okay. Then you've got, the big story with China, and all week last week, China's going to make a deal. They're not going to make a deal. I don't know. I'm not sure what's going to happen. Where's Jackie Mason when I am? In the meantime, China's going to make a deal. You can bet on it. You can take it to the bank. Okay. We don't need China. China needs us. Okay. It's a very simple fact. Okay. For all of our goods and services that they do buy, they need us, and we can produce everything that they produce. They're not such a bargain. As they have become and have grown over the years and gone from a third world to what they are now, I think the problem you see is that they no longer have it's not the sympathy vote, but the sympathy vote. It's no longer that we have to help China. China is monstrous. All right. However, they're not as big nor as powerful, and they have a lot more issues to deal with. And their debt system is in worse shape than ours is, believe it or not. And we're in bad shape. Okay, we opened up the show with that. We are in really bad shape. So when you continue to look at what's happening with China, they're going to work a deal. Okay, it's got nothing to do with trade wars or anything. Right now, we're seeing a push. Okay, we're seeing a battle, but we have to win the battle because basically we hold all the trump cards. And I didn't mean to, that wasn't meant as a pun. That was just a slip of the tongue. But we do hold all the trump cards because we are the biggest. We are their biggest customer. We can survive just fine without them. They cannot survive just fine without us. So there's a lot of things going on here that tell you that we're going to resolve this deal. Plus the fact that they are no longer a third world nation, all right, which is why they were getting the breaks they were getting before. So if they want to go into free trade, which they will, they're going to work it out. Both parties will walk away with saving face, more China than anybody else, because in this case, we are going to get it done and handled properly, and then we'll move on. In the meantime, when you look at the goods and services that should have been affected by these potential tariffs and trade war stuff, there was no big deal. Okay? Remember, the grain prices, other than soybeans, are higher than when all this started. So there hasn't been all that stuff to worry about. It was really more about the regulators and the lobbyists and the politicians, which we will talk about when we come back with my commentary right here on Bubba's Bottom Line. This is Todd Bubba Horwitz, and we want to remind you to check out our high school investing program if you'd like to help us out. Highschoolinvesting.com, check out the curriculum. If you want to help us, go to Patreon, patreon.com/Bubba Trading. And you can help us out. And remember, too, to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. Now let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz. And, of course, every week I get my shot at what I got to say, what's on my mind. And I think today's question is, who's regulating the regulators? All right. Obviously, for years and years and years, we have seen all kinds of regulations come and go. We've seen all kinds of things happen, and yet who actually regulates the people who set the regulations? We've got, right now, you've got China talking about the trade wars, United States obviously, but all of the things that have been regulated is more involved with the lobbyists, the politicians, and big business. They're the ones who are controlling the regulators. And that's really, I think, the tragedy that you have here. If you look at some of the things that have happened over the last few years with regulators, take a look at J.P. Morgan, okay, with the whale trader, 5 or 6 years ago, okay? So they got fined $5 billion, but they didn't get put out of business. And I guarantee you that they made much more than the $5 billion they got fined, because I guarantee you that whale trader, that wasn't the first time he made that trade, as they would like us to believe, okay? But basically, J.P. Morgan told the regulators to go flip off, and they walked away. Let's look at Wells Fargo very recently, okay? They've got new commercials out now apologizing. Now, I know what they did. I could see what they did. It was quite obvious. But again, they're flourishing and walking away. Again, basically, yeah, they went to Capitol Hill. They did this, but this is the game that they played. This is I think is what annoys me more than anything is the big money, the big guys don't have to go through the same stuff that the little guys do. I have known many businesses that have been put out of business by the regulators because they can't go after the big guys because it's kind of like the secret handshake deal. All right. So yeah, they fine them, but they don't rip them. And I think that to me is a much bigger problem. And as we look through all of this through Congress and the Senate, do you ever wonder why they can't ever get anything done? Do you ever wonder why we're still in the same position we are today? Do you ever wonder why we've become so far divided? Okay. That to me is the bigger issue. And that's where we have to take care of. And part of the draining the swamp, it starts with who regulates the regulators. It starts with the contributions. It starts with the politicians. It starts with all those things because they somehow became immune to any damage that could possibly happen. Because you can bet on it that all of these institutions have done something wrong that should be regulated, but yet the only people that ever get punished are the little guys. And that to me is the bigger problem, is the way we allow things to happen around here. We let the big guys put the little guy out of business and don't strap him with the same onerous regulations that everybody else has. Because to fine a big company is no big deal. They write a check, they've got the money, okay? But to not dig in deeper. This goes back to Bernie Madoff. We know, or at least I feel, there's somebody else that was involved there, so far remained silent. But somehow, somebody on the inside knew what was going on because he couldn't have done it by himself. And it had to take somebody who was in a higher power. And someday it'll come out because, again, you can't get away with these things. This goes back to the same as these highly leveraged ETFs, which are all crooked, okay? They're scamming and stealing the money. So how are they doing it? Because they've got help from some of the regulators. So the real question is who is regulating the regulators? And that will answer a lot of our problems and help us out and put us on the straight and narrow. In the meantime, once again, we want to send out our thoughts and prayers to everybody in Houston and every parent, everybody who had any involvement in this evolve, and anybody who can feel the pain in their heart of what happened there. Houston, we send it out to you and pray for you. In the meantime, this has been Bubba's Bottom Line, and I am Todd Bubba Horwitz, and everybody have a great day, have a great week. We'll see you on Bubba's Daily Update. Thanks, everybody. Have a great week. We'll see you later.